Hello everyone. This is the pre-market report video for today, April 12th in the Indian stock market in terms of Nifty and Bank Nifty. Day before yesterday, Kotak Mahindra Bank released their new shareholding pattern. As per that, their FI shareholding decreased from 41% to 39%. After that, based on the shareholding, brokerage called Nuvama Institutional Equities released the report that at present, Kotak Bank's foreign room increased over 25%. Like Nifty for NSE and Sensex for BSE, there is an index called MSCI Emerging Index. This index got some Indian stocks in it and they do follow some calculation methodology to determine how much of the money they will allocate for each stock in it. All those details they released, I will attach in the description below. If anyone fancy reading it, please have a look. Coming back to the topic, as we discussed, because of the foreign room for the Kotak Bank now moved about 25%, this brokerage believes and predicts that post the review, MSCI index will use the new adjustment factor of 1 for Kotak Bank, which might bring the additional funding of 5,000 crore rupees in the stock. Here, please note it's not yet happened, but they are assuming and expecting that MSCI index will increase the adjustment factor in Kotak Bank based upon their given guidance. This might happen or this may not, only time has to answer. Anyway, this made the Kotak Bank to increase over 5% and thus all the banking stocks. The impact of this was clearly seen in Nifty's yesterday's price movement. Prior to the Indian market opening, SGX Nifty was trading flat. However, at 9:15 am, Kotak Bank single-handedly caused the Nifty to open positively up by over 80 points. Throughout the day, it remained relatively stable, fluctuating within a 40-point range and closed positive for the 7th consecutive day. Sector-wise, IT dragged the market down, but banks and metal supported the market significantly. And for the 8th consecutive session, FII was net buyers. The net bought shares worth approximately 340 crore rupees, while DIs net sold shares worth approximately 260 crore rupees. So this is what happened yesterday. Then coming to US market, unlike Indian market, S&P 500 opened flat. Then throughout the day, it varies only 24 points. That's too in the upside, but in the end, it closed flat. There was no particular event or economic data that had an effect. It just pure some stock specific impact that moved the market as it is waiting for the inflation data release, which will be tonight. UBS Investment Bank, largest in Switzerland, released the warning that street and market is expecting higher cloud business growth of over 25%, but they think it will be less, particularly Amazon to grow less than 10%. This warning made the major cloud stocks such as Amazon, Google and Microsoft to down over 1% and thus it affects the Nasdaq. Moving on, EIA released monthly energy outlook and in that they said because of the OPEC plus countries production cut, they expect the oil price for end of 2023 to increase over 2.5% compared to its last month's prediction. This made the oil price to increase over 2%. And at the time of this video, WTI crude oil is trading near 81.5 US dollars per barrel and Brent crude oil traded near 85.5 US dollars per barrel. Thus, this supported the energy stocks and made the Dow Jones to close positive. In the end, Dow Jones increased by 0.29%, S&P 500 closed absolute flat and Nasdaq down by 0.43%. Regarding US VIX, it's still trading near 19. In terms of Indian ADR, despite Indian market IT stock weakness, both Indian IT ADRs in US market closed 0.5% positive. Then about banks, both increased over 1%. Regarding SGX Nifty, at 3 am Indian Standard Time, it closed at 17,802. So it's indicating a 25 to 30 points gap up opening. So these were the things that happened in the global market. Now let's see the Indian market related info. First, today in the aftermarket hours at 5:30 pm Indian Standard Time, Ministry of Statistics is about to release the consumer inflation for the March month. At present, the expectation is of around 5.8%. Similarly, in the next half hour, at 6 pm Indian Standard Time, US Bureau of Labor Statistics will be releasing the US consumer inflation data. At present, here the expectation is 5.2%. And around the same time, TCS will be releasing its final quarterly results. The present expectation is that the revenue to grow around 1%. So today in the aftermarket has within 1 hour period there will be a 3 important determining events. Therefore, based upon the effect and strength of both profit booking and short covering will determine the market movement today, or else it might be completely flat. Let's see. Anyway, there was one negative macro. I don't know the impact but like to highlight it. Yesterday, IMF released the global GDP growth data and thus the India's GDP growth rate. Here, they reduced the FY 2024 forecast by 20 basis point to near 5.9%. As I said earlier, I don't know the impact of it. In terms of technical, on daily chart, Nifty forms a doji candle pattern with a short upper and lower shadow. Again, it's kind of indicating the indecisiveness among buyers and sellers, but still for the 7th consecutive session, Nifty closed positive. For somehow, market remains and sustains the buy on dips. Anyway, at present, yesterday Nifty broke its crucial near-term resistance 17,700. So the rally may extend towards 17,850 to 17,970. But I strongly believe that should be based on the US inflation numbers and TCS quarterly results. As I said yesterday, at present there is a consolidation pending. Then coming to moving average and technical indicator, for both Nifty and Bank Nifty in daily chart, as a summary, it's same as last 3-4 trading sessions, strong buy signal. Regarding options open interest, for Nifty, if you see the change in open interest, there were huge new put options were added at 17,700 and significant new put options were added between 17,500 to 17,650. Literally no new call option open interest were added. Then, based on overall options open interest, 17,500 got the maximum nearby put option open interest without significant call option open interest. So, 17,500 is the support to look out for. And the maximum call option open interest is present at 18,000, followed by 17,700 and 17,800. Since 17,700 is the short straddle, and thus 17,800 is the immediate resistance to break and 18,000 is the strong resistance for the expiry. Then coming to Bank Nifty, based on change in open interest, similar quantity of new number of put options added at below 41,500 and more quantity of call options were unwinded below 41,500. Then based on overall options open interest data, significant short straddle were present between 41,200 to 41,400. Then the maximum call option open interest without significant put option is at 42,000. Thus 42,000 is the resistance to break. And the maximum put options without call option is present at 40,500. So 40,500 is the support to look out for. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the YouTube algorithm and it will also motivate me to do more. Please don't make any investment decision based on this as I am not a SEBI registered advisor. I am doing it for my and viewers' educational purpose only. Thanks for watching.